Very good morning to all. I hope you are doing great. I am also good. Very warm welcome to my YouTube channel. My name is Dr. Reena and I am so happy to have you here. In today's video, we are going to talk about these topics: accounting principles and standards, preparation of financial statements. So let's understand these topics one by one thoroughly. First topic we have accounting principles and standard and preparation of financial statement. Basically, accounting plays a crucial role in recording, summarizing, and reporting financial transactions of a business. To ensure consistency, reliability, and comparability of financial information, and businesses follows accounting principles and standards. These principles form the foundation for preparing financial statement, which helps stakeholders assess a company financial health. So let's understand the accounting principles and standards. Before going through the next slide, let's understand the definition of accounting principles and standards. Accounting principles and standards are a set of rules and guidelines that organizations must follow when recording and reporting financial data. These principles ensure uniformity, transparency, and accuracy in the financial reporting. So, basically, what is the accounting principle and standard? It is a set of rules and guidelines, and that organization must follow. So, this is called accounting principles and standards. So, these are the principles of accounting, and these are the standards. So, let's discuss these one by one. First principle we have accrual principle, and second principle we have consistency principle. After that, third principle we have going concern principle. Apart from that, we have next principle matching principle, and apart from that we have materiality principle, conservation principle, and revenue recognition principle. Moreover, we have full disclosure principle. So let's understand these one by one. So first is accrual principle, which means the transaction should be recorded when they occur, not when cash is received or paid. Basically, okay, so all the transactions should be recorded when they occur. And for example, revenue is recorded when a sale is made, not when payment is received. Okay, and next principle we have consistency principle, which means the company should use the same accounting methods consistently over time. They can't change the methods of accounting after year and year. For example, if a company uses the straight line method for depreciation, it should continue using it unless a justified change is needed. Next principle we have going concern principle. That means a business is assumed to continue its operations indefinitely unless evidence suggests otherwise. For example, company does not liquidate its asset unless it's planned to close. Next principle we have matching principle, which means the expenses should be recorded in the same period as the revenue they help generate. For example, if a company incurs advertising cost in December but earns revenue in January due to the ad, the expense should be recorded in December. And next principle we have materiality principle, which means only significant financial transaction that impact decision making should be recorded. For example, $10 expense in a multinational company may not need detailed disclosure, but $10,000 expense might be included. Next principle we have conservation principle. When there is a uncertainties, accountants should choose the option that result in the lower profit or asset values. For example, potential losses are recorded as soon as they are known, while gains are recorded only when realized. And the next principle we have revenue recognition principle, which means the revenue should be recognized when it is earned and measurable, regardless of cash flow. For example, a company providing services should recognize revenue when services are delivered, not necessarily when payment is received. Next principle we have full disclosure principle, which means the financial statement should provide all relevant information to stakeholders. For example, companies disclose pending lawsuits in financial statement if they affect financial performance. Next, we have accounting standards. Okay, so these are the principles that the companies need to follow, and these are the standard that the company need to follow. So let's understand these accounting standards thoroughly one by one. So basically, accounting standards provide a structured framework for financial reporting. The two most widely used accounting standard are: first, we have generally accepted accounting principle, that we call it GAAP, and basically it is used mainly in the US, United States, and enforced by the Financial Accounting Standard Board, which we call it FASB. And it also provides the rules on revenue recognition, expense classification, and asset valuation. Moreover, we have the second accounting standard is International Financial Reporting Standard, that we call it IFRS, which means it is used in over 140 countries, including the European Union and India. So in India, which financial standard we use? IFRS. Okay, so this is the standard that we use in India, and it is enforced by the International Accounting Standards Board, which we can call it IASB. It also focuses on fair value accounting and global comparability of financial statement. So these are the key differences between the two standards. First, we have generally accepted accounting principle, and second, we have international financial reporting standards. So these differences based on their feature. So basically GAAP, it is basis on rule based, and IFRS, it is international and it is based on principle. GAAP is inventory valuation. In case of inventory valuation, it allows LIFO and FIFO, first in and first out, last in first out. And in case of IFRS, in case of inventory valuation, it does not allow LIFO, last in first out. In case of revenue recognition, GAAP is strict guidelines, and in case of revenue recognition, which include the IFRS, where more flexibility should be there. And in case of asset valuation, in of GAAP, historical cost based, and in case of IFRS, it is fair valued based in case of asset valuation. Next topic, we have preparation of financial statements. So let's understand these one by one thoroughly. Financial statement provide a snapshot of company's financial position, performance, and cash flows. They are prepared based on accounting principles and standards. So this is the base. You can say this is the accounting principle and these are the standards. So this is the base for financial statement. When you want to prepare the financial statement, then you should be aware about the financially standards and principles. Okay, so these are the key financial statement. First statement, we have income statement, which include the profit and loss statement. It shows the company's revenue, expenses, and profit over a period, and these are the key component of income statement, profit and loss statement. So where it include the revenue, that means the sales income from goods over services, and cost of goods sold, that means the direct cost of production. And in case of gross profit, then revenue minus COGS, that means cost of goods sold. And next we have operating expenses, that means the administrative and selling expenses. In case of net profit and loss, you have to include the final earning after all deduction. So this is the example based on this one, income statement, where include the profit and loss statement. First we have XYZ Limited Company, and these are the income statements and these are the amount. Okay, in case of revenue, COGS, gross profit, operating expenses, net profit, and these are the amount with respect to every statement. Next we have the balance sheet. This statement of financial position based on the that I already mentioned, based on the principles and standards. So it displays the company's asset, liabilities, and shareholder equity at a specific date. It follows the accounting equation: asset is equal to liability plus equity. Okay, and next we have, and we can also say this thing like that: equity is equal to asset minus liability. So in that case, you can find out the equity. Next we have the key component of balance sheet: asset, liability, and equity. These are the three component in case of balance sheet. So in case of asset, we include the cash, accounts receivable, inventory, properties. And in case of liabilities, we include loans, accounts payable, taxes owned. And in case of equity, we include the capital invested by owners and retained earning. Okay, so these are the key component in case of balance sheet. And in case of income statement, these are the key component that I already mentioned earlier. Okay, so next statement we have cash flow statement. It tracks cash inflows and outflows from operation, investing, and financial activities. It helps accessing the liquidity and cash management. And these are the sections. First we have operating activities, second we have investing activities, third we have financial activities. In case of operating activities, we include the cash from business operations, and in case of investing activities, we include the purchases, sales of asset. And in case of financial activities, we include the loans, dividend, issuing shares. For example, the cash flow statement where we include the company of XYZ Limited. Okay, and this is the amount of operating cash flow, and this is the amount for investing cash flow, and this is the amount financing cash flow. And now we have net cash flow is 20,000. Okay, so next we have steps to prepare financial statement. In that case, you should be aware about these things, like record all transactions, where maintain a journal entries for all financial transactions. In case of post to ledger, classify transaction into accounts, asset, liabilities, expenses, etc. And in case of prepare a trial balance, then you should be aware about this thing, like you have to ensure total debit equal to total credit. And also adjust entries, account for accrual, deferral, and depreciation. Prepare a financial statement where organize data into income statement, balance sheet, and cash flow statement. And also analyze and interpret excess financial health using ratios and trends. Okay, so come to the conclusion. Accounting principles and standards ensure accurate, consistent, and transparent financial reporting. In case of GAAP and IFRS are the two major frameworks guiding financial statement preparation. And financial statement, including the income statement, balance sheet, cash flow statement, provide the essential insight into a company's performance and financial position. Preparing them systematically allows businesses, investors, and regulators to make informed decisions. Okay, so these are very, very important. So these principles and standard are the most important things that you should be are aware about these things. Like these are the principles and these are the standards. Okay, so that is all about for the today's video. Thank you so much. If you like this video, then do like and comment my YouTube video and also subscribe my channel. Have a nice day. Keep learning, keep growing, keep shining. Bye bye. Take care.